Is our money broken? Is it in the process of breaking? According to the World Gold Council, in 2022, central banks around the world bought more gold than any time in history, and the massive gold purchases in 2023 are now likely to exceed 2022. Do central banks know something we don't? To make sense of this present economic environment, we will hear from economist, White House advisor, and author Jim Rickards, and economist and investor Keith Wiener.
Gold has been doing what it does for 5,000 years. And the proposition is that it's going to continue doing for the next 100 years what it's been doing for 5,000 years. Austrian economics teaches us that as the quantity of a commodity increases, its utility or value at the margin decreases. Gold is not consumed, and it's been continuously mined, so far as we know, for at least 5,000 years. And in those 5,000 years, we have not reached the point where marginal benefit is less than marginal cost. We continue to accumulate more of it without any apparent limit. And what this is saying is that at the margin, gold's utility is not diminishing. The nth plus 1 ounce has the same value as the nth ounce, which is saying that gold is the closest thing we have to an economic constant. Now, why is it important to have something that's an economic constant? If you look at the firm, if you look at the enterprise, what is the single most important thing that every business owner, operator, manager needs to know? Are we creating wealth? Are we destroying wealth? And how do we measure that? You need something that will give you an objective picture, and gold is that objective picture. I don't think there's any real debate as to whether gold continues to be for the next 100 years what it's been for the last 5,000 years. The only real questions are, one, when does the dollar collapse?
It will be bigger than the Fed because all the policy that I described, that $4 trillion approximately of money printing, is still there. So what happens the next time there's a liquidity crisis of the kind we had in 2008? Except the Fed did everything I just described to put out the last one. That's still there. What are they going to do next time? Print 8 trillion? 12 trillion? There actually is not a legal limit, but there is some confidence limit or political limit on what they can do. And that crisis is going to be bigger than the ability of the central banks to snuff it out because they've all trashed their balance sheets. The Fed is leveraged about 80 to 1. It's insolvent on a mark-to-market basis. And you don't take my word for that. I've had a recent discussion with an FOMC member. Can't mention the name, Chatham House rules, but the substance of the discussion was, I said to this individual, the Fed's insolvent. There's a dinner, I like to be a little provocative if I can. On a mark-to-market basis, I said, I know you don't mark your balance sheet to market, but if you did, it would be insolvent. And the individual said, no, we're not. No one's done that calculation. I said, well, actually, I've done it, and I think others have done it. And the person demurred a little bit and said, well, maybe. And then I just stared at this individual and wouldn't let the person off the mat. And finally, the individual said, well, we are, but it doesn't matter. Central banks don't need capital. That was an exact quote. Senator Paul has already started to talk about the insolvency of the Fed. If you think bailing out banks in 2008 was unpopular, wait till we have to bail out the Fed. So the point is they're at the outer limit of what they can do, in my view. The IMF is only leveraged 3 to 1 versus 80 to 1 for the Fed, and so the liquidity is going to come from the IMF, but they can't print dollars. They can print SDRs, these special drawing rights. Think of it as world money. I mean, it is world money. They just gave it a geeky name so people wouldn't know what it is because world money sounds a little scary. But that's what it is, and that'll be the end of the dollar.
The famous economist Milton Friedman once said, inflation is taxation without legislation. Currency debasement is an odorless gas. It fills the room slowly, and by the time you notice, the damage is done. Policymakers, institutions, and governments may decide the fate of our currency. It is our responsibility to safeguard the wealth we have, because no one else is going to do it for us. If you are interested in protecting your retirement savings and preserving your purchasing power through a tax-deferred gold IRA, see the links in the video description. To attend a free gold education webinar held by Augusta Precious Metals, see the link in the video description. Thank you for watching.